All right, what's going on, everyone? This is Brendan from the Trading Fraternity, and I'm here today with another tutorial request by our Citizen program. And we're going to be covering today is rolling strategies when it comes to going long calls or puts. So, the most commonly asked question when it comes to a new trader being in a profitable option trade is, what do I do next? They're asking this is because typically new people, they only buy one contract at a time. And so they're not able to scale out of their position to protect their profits. So scaling out, I mean, as in like selling half of their position. Since they only have one contract, they're forced with either holding onto the position or just selling completely out of it. So today, I'm going to show you different ways that you're able to roll up and out. So just like my last video, I'm going to use Goldman Sachs as an example. And if you guys didn't watch that option analysis video, this guy bought $1 million worth of November 170 calls for $2.40 each. So let's just say that you tailed this guy and you got filled for 240, okay? And just to show you on the chart, this is where the guy got in probably around 162, 163, and since then it has rallied, okay? Say if you guys got this contract, all right? So your entry was 240 on it, okay? So let's take a look at what the current price of these are. Let me just pull up my chain. The Novembers. So right now they are in the money, so they're going for 5. Let's take a look at the chart of these, the option chart. So the highest price that someone paid was $7. It was between 6 to 7 is the highest. So let's just say your current price of these options at the time, let's just say if it was in mid rip all the way up here, the current price was $6. I'm gonna go with a flat number. Okay, so your P&L, you would be plus 360. Okay, so at this point, people, typically anyone would be looking to, protect their profits, shave some off. But like I said, sometimes people just get one contract at a time, which is okay. So this is what you can do here. If you're still convicted that this trade is still going to continue, but you want to protect yourself, protect some gains, you can roll out. So let's take a look at the Novembers here. And when it comes to rolling out, the goal is to cash out of your original position and put your initial investment back in there. So looking at this here, the 175s are kind of a little too more, it's a lot more expensive than your actual entry point. So let's go with the 180s, and 180s are kind of reasonable if you're still super bullish for the month of November on Goldman Sachs. So your max risk, so for the November 180 risk would be $1.50. So as you can see here, if the November 180, say if the stock did pull back, your risk would be $1.50. You would still protect your profit, which was $3.60, and you actually would still protect like 90 cents worth of your initial investment. And so say if you were not that bullish on Goldman Sachs, but you're still bullish, but you don't think the November 180s are not going to hit, so you want to give yourself another month. So we'll go to December here, and we'll look at the 180s. So if you want to take on the December 180, your risk would be about 260, it looks like on here, about 260. So it would be a little more expensive than your initial investment, obviously with 240, about 20 cents more, but you'd still protect your profits, as you can see. And say if this did go against you, you would still be up $1 from your initial trade. See where I'm getting at here? You're rolling up and out. But the benefit of this is that you have a whole another month to hit 180, and you can always reevaluate the trade. So if you do want to get out of it, you are able to, and all that. So like I said, the point of rolling is that you still have conviction that the trade is going to continue. If not, sell out, move on to the next trade. I know personally I used to, and I still roll to this day if I'm still convicted, but back then I would suffer with a lot of FOMO. I didn't know how to maintain FOMO. If you guys don't know what that is, fear of missing out. So rolling is a common strategy because they'll keep rolling their position up, so they still have like a toe in the game. you know, and so they're not missing the move and they're rolling up till the last roll fails, which is okay, but because you're still protecting your profit. So right now, what I'm going to do is I'm going to give you guys another example. Let's go with a cheaper bank than Goldman Sachs. So let's take a look at these here. I'm going to take a look at the Novembers. All right, so at the money right now is 16. They're going for about 60 cents here. Say if you rode the 16s here, let's take a look at the chart. So, all right, the cheapest was around 20, yeah, 20 cents. So let's say if you bought these for 20, your entry was 20 cents. And right now, as you can see on the chain, they are about 60. So the current price, if I can type, 60. So your P&L, you would be up 40 cents. So let's take a look at this. Pretty much the same example as with Goldman Sachs. You want to protect your profit. So let's put your initial entry back in there. Initial investment, I mean. So let's take a look at the 17s. You can get these for about 20 cents also. So you can roll up into November 17s. Seem to not be able to type today. For 20 cents. And say if you didn't really believe that it was going to hit by November, you can roll up and out to December. And obviously you can see these are a little bit more expensive. So December 17, your risk is about 34 cents. So again, you would protect your profit loss, but with your entry, so with Bank of America, you can actually get more than one contract. So say if you got a basket of these of $100, so that's five contracts originally, you can roll out with the November same amount. And but for December's, you would have to do less contracts because obviously they're a little bit more expensive. But at the same time, you have a full other month onto this here. So this pretty much explains the rolling out strategy when we were talking about. So if you guys want to protect your gains and you guys are still convicted that the stock is going to go, roll up and out. You have your two different choices here. Like I said, if you guys are not convicted, you know, just get out, move on. So that's it right there. So this pretty much wraps up the video here. Remember guys, roll up and out to protect those gains. You know, roll up to a further strike or roll out to a further date. And hopefully this has helped you out. And again, guys, keep hitting me up for more tutorial ideas. I love doing these. These are actually kind of fun. So that being said, you guys have a great weekend, okay? Take care.